it's important to see where most often the liquidity, those long-term liquidity are lying, you know, most of the times around the 80, around the 20 multiples. Okay, and here you'll see at the 60, just waiting down here, price coming down from the round numbers above, find some support here around the 70, but the 60 is still waiting down there. If the price was to come down, this is very, very likely to provide a strong support where we can see, where we can find our entries and come back up. Okay, here another example at the long-term liquidity sitting at 80. You know, from oftentimes you want to like front run it a little bit, but it's very likely that the price will come up and test it at some point. But you'll see those patterns and those levels reoccurring every day at every, it doesn't matter, you know, which price it is, you know, the 20 multiples are always very effective and providing really strong support and resistance levels. So look for liquidity sitting there and look for the price to react around those levels. Okay, here again you see the liquidity, long-term liquidity over here sitting at 40, you know, price, you know, staying in the range between the 20 and the 40. Okay, all right, and so the action areas. So between the primary and the secondary level, so the primary were the 50s and the round numbers, there are other areas where the price tends to react. There are very small short-term areas, and liquidity is not always seen there. You don't really have to see, like, you know, strong levels of liquidity. You know, sometimes the price will get there, you don't see any liquidity or very little bit, but the price will likely react, you know, around those areas. And that's where we are going to look for entering, you know, look for our exhaustion or absorption patterns and enter our trades. And those areas are between 5 and 6, or 5 and 06, the 10, the 15 and 18, around, you know, like these small areas. So on the 25 and 26, the 30, 36, 38, 46, 48, 55, 66, 75, 76, 88, 95, 96. Ideally, one could even like draw horizontal lines, you know, on the chart. I just memorize them. I just have them in my head because they tend to be always the same. They don't have to be extremely precise, you know. Like, you know, if I see the price comes down, say for example, you know, from the 20, and you know, I will look, you know, depending on the velocity, depending on, you know, the volatility of the day, but I will look to enter around 18, 17, 16, or even 15, you know, to take my 4 to 6 points profit. And the same, you know, around all those other numbers. Those numbers act as support and resistance. So basically, we are looking to fade moves, okay, to find those exhaustion or absorptions patterns around these levels, okay. That's where we want to get involved, okay. Just so not like any pattern at all, but in particular around those numbers. So if we see like a price experiencing a 10 points move higher, chances are to have a retracement from one of those levels. So if you see, for example, price go all the way from 10 up to 20, like in one moves, well, seeing a peak in volume at around 20, signaling also an absorption. That's where you see that you got a 10-point move, you got an absorption, you got your level. You're very likely be able to fade that move and look for a retracement, even if it's a small one. But 4 points in NQ can be do it a few times a day and can be extremely profitable. Okay, let's move on to next slide. So let's see some examples here. Here we got a short entry here around the 25. Price was coming up, taking a short. There was some liquidity here at 25.50. I front run this liquidity a little bit when you see this move up and some exhaustion. And price gets some absorption. Sorry, price buyers gets exhausted there a little bit. Sellers come in. There's pretty much no buyers even here. No buyers. Pretty much just seller and sellers take some profit. 4 points later, there was a 2-lot position over here. Profit 1, and then second take profit below around this area of liquidity. And you see here, where does it react? Takes this liquidity here at around 18. Was a little bit around 18. One could be taking a long over here after seeing this absorption and peak in volume over here. With I didn't take the long simply because I was counter trading it, and so I took a short here because you see there's some exhaustion over here on the buy side, but there was not enough volume on the ask. So I did take a short only to get stopped out for a few ticks. Price comes up and see some exhaustion here on the buy side. Take another short, see if I can risk this again for a few ticks of risk. I see some volume come in that makes me stay, then price comes back down again. Here there's some buyers, but it doesn't follow through, and take some profit below, down here at around 17 and 15. Okay, price breaks down below, and then now here it keeps going. But you see, the biggest thing, the most important thing here to understand is that you can have your losses, and if you see, for example, here there's an exhaustion here on the buy side. You can take a short, but it doesn't necessarily mean it's going to be, it's going to move down. Here I see that there's not a lot of, ideally you want to see sellers taking over, after this exhaustion, and more, red dots increasing and pushes the price down, which it didn't happen. I saw more volume coming in. If it gets below this high, I'm like, okay, I'm out. I'm willing to take this couple of ticks, and see if I can get back in later. That day was a very strong momentum down day, and so I would have rather look for a short trade rather than a long trade. And when you find a good entry, it's easy to get 4 to 6 points, or even 10 or more, in your favor. But you gotta be also disciplined enough to say, all right, if I see the volume coming against me, I'm out. I don't care. You don't need to wait for longer. And even if this trade would have been profitable, I could have easily seen an increased volume and pump the price back up all the way. And you don't want to see that. You don't want to be in a losing trade. You must say, okay, I get out, I take my few ticks, and that's it. Okay, and find another opportunity. Okay. See some more examples. So like in this example over here, the price, we got some strong long-term liquidity sitting over here at the 50. and the price tries to get up. There's some volume over here, but